Good morning, good afternoon, good evening to East Central Missouri and the world, and welcome to the James Strong Show podcast number 292. Thank you for joining us. Thank you for making us a part of your day. I appreciate it. This podcast was recorded on the morning of Sunday, November the 13th, from the James Strong Studio in Western St. Charles County. Yeah, no podcast yesterday, so I moved it back a day to Sunday because yesterday was just a full day when it came to Jaguar stuff. So I'll start the podcast off with an update on the restoration of the Jaguar Mark 7. Okay. Actually, it's funny because I spent the whole day indirectly working on the car, but actually I spent no time working on the car. Okay, what the heck are you talking about, Strong? Okay, here's the deal. The progress on the car, we're getting closer and closer and closer. Body work, done. Engine, rebuilt. Transmission, done. Transmission mounts, motor mounts, clutch, all that done. Carburetor, rebuild parts, done. All that's ready to go. And basically, they just want to know, okay, do we need to just clean or buff this engine, or do we need to paint the transmission? We'll do that. We'll install this thing, and you can have it back. Well, then I asked him, I said, well, what about this engine? Does it run? Well, we think it will. No, we can't. We're not going to put this kind of money into a car and say, yeah, I think it's going to run, and then it doesn't. And 6 months later, we have an argument. So I said I want to see the engine run. So they're going to put it on a test stand. We're going to run the engine. Once I'm satisfied, then they put everything together. I take the car, and then I start putting the thing back together for real. Okay, so that's where we are. As I mentioned before, everything for this car, even though it's from 1951, it's an old car. It's, 72 years old, okay? But many parts are still available for it. Some of them don't even cost that much. Other parts, you can get rebuild parts, rebuildable parts. Some of them, you can buy new parts. Some of them, you're on your own, okay? And by you're on your own means you have to build the replacement parts. Now, fortunately for me, I have a machine shop in my garage. I've had a machine shop in my garage or my basement for the last 35, 40 years, probably 40 years, okay? At least 35 years. I've had a machine shop in my basement or garage. Well, instead of going back and forth, yesterday, two of my boys and I, we moved the machine shop from the garage to the shop, and I'm in the process of setting that up. So that's what I did yesterday. So now the shop is basically set up so I can rebuild the car, put it together, and build the parts for it that I need to, all in the same building. So it was you had to take one step forward, or two steps back in order to take two steps forward sometime later. So that's where we are. Yesterday was spent on that, which is why I couldn't do the podcast, but we're doing it today. Topic of today's podcast, is cryptocurrency explained or not? Now, what do you mean by that? Well, we're going to talk about cryptocurrency, what it is, big bankruptcy this week in the cryptocurrency world. And we'll talk about that as well. And I will tell you, I don't understand how cryptocurrency works. And so I've had people say, well, if you don't understand how something works, how can you damn it? Well, that's what I'm going to do today. And part of it is because I don't understand how it works. I'm not sure that anybody understands how it works. And maybe I don't know what I'm talking about. Maybe it's just a degree of naivete on my part that I don't just understand it. Maybe I'm stupid. Or maybe those that say they understand it just don't. And we're going to go into that. The FTX bankruptcy, cryptocurrency, where it is, where it went, and where it's going. So we're going to talk about that as far as the main essay of the podcast, okay? But before that, we do have a couple of other stories. I saw the most interesting byline on a Wall Street Journal article this week. And it was written the morning after we had the big bump up in the stock market. That was a big bump up. What was it? Thursday in the stock market, a huge increase, and it had to do with the fact that everybody expected inflation to be X, and it was considerably lower than that. And so somebody in the Fed made a statement that, you know what, maybe we're not going to raise interest rates 0.75. We're going to raise it 0.5. So everybody thought, okay, maybe the end is near. And so I think the S&P went up 5% plus. The Dow Jones went up 3.5%. The NASDAQ, I think, was up over 7%. But it was a big deal. And this Wall Street Journal article on Friday morning basically said that. Look, the stocks were this because of that, and we expect this because of that, and that because of this. And it was a basic article, just giving the facts without much editorial, which is why I enjoy reading the Wall Street Journal. But that's not what made the article interesting. What made the article interesting was the byline to the article. Part of what makes the Wall Street Journal a wonderful publication is I can pick this thing up. I mean, my day starts either depending on if it's a go to the gym day or not. If it's a gym day, my day starts between 4 and 4:30 in the morning. If it's a standard work day, my day begins at 5 or 5:30 in the morning. First thing I do, I get up, get my coffee, open up the Wall Street Journal on my phone. And there's all kinds of good stuff on there already. And the reason being is because the people who write these often have Asian names. Translation, they're from Asia. Translation, they've already been up for about 10, 12 hours. So they've been able to write the stories. These stories don't come out of New York. They come out of the correspondence offices in Asia. So they're working the 9 to 5 just like everybody else, but the 9 to 5 over there is 12 hours ahead of you, so you get the updated news. See how that works? Then later on, the bylines are from more Western names. In other words, the Europeans and the Americans and then everybody else, they're now writing the articles later in the day. But you get a good influx of news throughout different parts of the day. But the byline on this particular story really piqued my interest. It said, written by artificial intelligence. I kid you not. What that means is there was no person that wrote this article. Artificial intelligence, they ran a program to gather information, put it all together, publish it, and send it out to you and I. No human was involved. And you're seeing that more and more and more in articles written. You're seeing that more and more in artwork, in voiceover stuff, where artificial intelligence is taking a bigger role in all this. Now, does that eliminate jobs? I guess it does. But just this whole artificial intelligence thing, it's now part of the byline in the Wall Street Journal. So it's not like this is going to happen in the future. It's more like this is happening right now. I mentioned earlier about inflation, and part of the reason the stock market went up big time on Thursday and even rallied a little bit on Friday, which is really a big deal because normally when you have a monster run up in the market, the next day, traditionally, you have some profit taking. So, for instance, if the NASDAQ was up 7.5 points on Thursday, you can expect it would not be uncommon for it to be down 5% on Friday. But that's still a net gain of 2%, which is a huge gain. Well, on Friday, the NASDAQ was up over 1% again. The Dow was up. The S&P was up, not nearly like it was the day before. But when you follow a record-type day of earnings with a moderate day of earnings, that's a big deal. And it has to do with inflation or the waning of inflation. And part of the reason I think we have the waning of inflation has to do with some of the big retailers we have, Walmart and Target, for instance. This week, Walmart and Target basically went to their suppliers and said, look, all these price increases you're giving us, we're not going to accept them anymore. In fact, we want discounts so we can pass those prices on to our customers. Now, if Walmart and Target are doing this, the other retailers have no choice but to do it themselves. Amazon's in the same boat. And they're doing it in untraditional ways. They're not doing it in traditional ways where they, okay, just give us a 10% discount. They're repackaging the items so that the package is smaller, so it takes up less shelf space, so it costs less to ship, okay? They're doing it with, okay, you need to give us this price at the same price last year, and we'll put it on an end cap for you in our stores at no extra charge. So if we put it on an end cap, you can expect an extra 5% in sales, just because that's what happens with end cap products, okay? So they're doing it in interesting ways. Bottom line is, if you go to the store and prices aren't going up, that will get rid of inflation quickly, very quickly. So this whole inflation thing may be winding down, which means rise in interest rates are going to wind down, which means the stock market will begin to rally, which means the economy will probably be turning in the near future. So I found that as very interesting news too. South Korea was in the news this week. And again, this is a story that nobody talks about, and they should be. And I say that because, well, okay, strong. I've had people tell me this many times. People in the radio business, when I start slamming the media, and I talk about traditional media, they look at me and they've said, you know what? Stop it, because you're the media. Which is true to a point. So I'm not going to say nobody's talking about it, because I read the article someplace and I'm telling you about it. But it has to do with South Korea. South Korea is selling arms for the Ukrainians to use against the Russians. Okay, well, so they're getting in the mix too. In fact, South Korea, for the first time, will sell artillery shells destined for Ukraine forces through a confidential arms deal between Seoul and Washington, a move that reflects a global scramble for munitions after months of a war with Russia. Now, the U.S. officials familiar with the deal say the U.S. will purchase 100,000 rounds of 155 millimeter artillery ammunition, which will be delivered to the Ukraine. That's enough to supply Ukraine's artillery units for at least several weeks of intensive combat. Okay, rounding the deal through the U.S. allows South Korea to stick to its letter of the public commitment, saying they will not send lethal military support to Ukraine while assisting Washington, Seoul's paramount ally, in deterring North Korea. And it goes on and on about how, Korea's being the good guys. They're helping out the Ukraine, but they're not going to make the Russians mad. But here's the main part of that story that had me scratching my head, okay? Now, U.S. officials say that South Korea's provision of its own artillery for Ukraine won't undermine their military readiness, because there's trouble with North Korea. I mean, North Korea and South Korea, they're enemies, okay? And recently, North Korea has been saber-rattling. So what they're saying is, look, we're going to sell 100,000 shells to the U.S. for Ukraine, but we're still going to have enough if we have to go to war with South Korea. Poland also has signed contracts with South Korea worth $5.8 billion to buy tanks, howitzers, and rocket launchers. And then Warsaw will take that equipment and send the weapons to Ukraine. Now, here's the thing. People are saying, well, this is wonderful, because South Korea is now helping out Ukraine just like many others in the West. Shells, howitzers, rocket launchers, tanks. They're selling all this stuff to Poland and the U.S. so that Poland and the U.S. can send it to the Ukraine. Did you catch what I said there? South Korea is not giving this stuff to Ukraine. They're selling it to the U.S. and they're selling it to Poland so we can give it and they can give it to Ukraine. That, my friends, is very odd to me. And I say that because I will tell you this about South Korea. South Korea is one of the strongest economies out there. And the last 40 years, maybe 30 years, they have turned from a third world nation where they had trouble feeding their people to a first world nation where they are very, very prosperous. And one of the reasons it's made them prosperous is because they have a very strict trading policy. Yeah, we'll help out the people in the Ukraine. You can buy this stuff from us. We're not giving you crap. You can buy it from us. Unless we're missing something, and I could be missing something. Maybe it's going to be sold, but it's going to be sold for pennies on the dollar. It's going to be sold with the understanding that they're going to sell this, but buy that. They're going to pay with goodwill. The story doesn't really say that. It just says sold, and they put dollar amounts on it, okay? If tomorrow the U.S. said, you know what? You're going to sell us this stuff? You're not going to give it to us? You know what? We're done. We're pulling all of our forces out of South Korea. North Korea, with the backing of China, would invade South Korea and take that country over. That would happen. South Korea depends on the United States to stay sovereign and prosperous. And they're going to make us buy weapons to give to Ukraine? That, friends, strikes me as very odd. And while I was no fan of Donald Trump, I thought he was a reprehensible human being, and he's the reason the Republicans can't win elections, because he's such a polarizing force. Many of his ideas, particularly the way he approached foreign countries and trade, were spot on and excellent ideas. I would say that if Donald Trump were president, he'd have told them, nope. South Korea, you want us to continue to have troops there to support you, you will give 100,000 rounds of ammunition to Ukraine. And you will give Poland $5.8 billion worth of tanks, rocket launchers, and other equipment to Poland so they can give it to Ukraine. In fact, why don't you just give it to them direct? And if you make Russia mad, you make Russia mad, okay? Perhaps you need to have them support your military so South Korea doesn't invade. That's what Trump would have told them, in my opinion. Another story before we get into the cryptocurrency essay. I was at the gym this week, and I've kind of changed my routine in the gym. I used to just work out in the regular area where they have the music blaring in the morning, and actually good music while going through an exercise routine for me helps. The only problem is, and maybe it's me being an old man. In fact, I'm sure it's me being an old man. They don't play good music. They play, it's this auto-tuned girl singing crap. Okay. I can't get into it. I'm not saying it's bad music. Please don't take it like that. It's just music that a 63-year-old man cannot find motivating whilst working out at 5 o'clock in the morning. Okay. It doesn't happen. Okay. So what I've been doing is I've been going into a room, the exercise room, the aerobics room. Okay. And I go there by myself. It's quiet. I'm by myself. I don't have to hear that stupid music. I don't have to watch the stupid videos. I mean, I don't even like watching the television at the gym anymore, because it's one of two things. It's either the sports guys. Okay. The sports guys talking about sports. That's what they do. But quite often, they don't talk about why this team's going to win because the other team's quarterback is hurt, or the other team picked up a running back who came out of college and is just setting the world on fire, or this point guard has gotten hot and is lighting up the nets, or this hockey team is none of that. It's what is the betting line of the latest football game or basketball game? What kind of odds are you given? It's the whole FanDuel baloney that, Pete Rose is banned from baseball for betting on baseball. And when you listen to sports guys talk, all they talk about is betting. So if I were Pete Rose, I would just go ahead and say, F you, and become a spokesman for FanDuel. Okay. But that's another story for another day. So I can't stand to watch the television. I can't stand to listen to music. So I go into this room by myself. But one of the things that the other thing they have on television is they have these videos, these short videos. And actually, they've kind of been around for a long time. The first time I ever saw them on a regular basis were on America's Funniest Videos. Remember that show? And it might even be on still in some markets. I don't know. But America's Funniest Videos, to me, were kind of funny at first, but they're all exactly the same. You have a guy or a gal or a kid doing something. They fall down, and the audio is beep, and everybody laughs. The next one, somebody's doing something, they fall down, and they go beep. Okay, you fall down and you cuss, but you don't know what they say because they beep it. Even though this is on cable TV and you can curse on cable TV, but they still beep it out, okay? And everybody laughs. They think it's funny. And these videos are at the most 15 seconds long, 20 seconds long. Enough is enough. I can't watch this stuff. I mean, if you watch it for a good 2 or 3 minutes, okay, what's next? What's just more of the same? And it's on for hours at a time, okay? These are the new movie stars, the videos of the people who fall down and cuss, and they film this. 75,000 different videos. Now, once upon a time, when you watch something on a television or at the movie theater, it would be such and such a movie directed by this director, starring somebody with star power. Those days are gone. The new movie stars is the 15-year-old with an iPhone filming his buddies skateboarding, falling down, and the audio saying beep. That's the new movie star. Don't take my word for it. You know who agrees with me of all people? Jennifer Aniston. Yeah, Jennifer Aniston and I are on the same page, if you can believe that. In fact, Jennifer Aniston, she had an interview with Allure magazine. By the way, Allure magazine features Jennifer Aniston on the cover. And this is the very last print version of Allure magazine. So one more magazine goes by the wayside because people don't read paper magazines anymore. They read the stuff online, okay? Now, Jennifer Aniston believes that in the area of movie stars in Hollywood, it's over. The Emmy Award-winning actress has made an impressive name for herself in the entertainment industry since she got her start on the acclaimed sitcom Friends. Now, during a new interview with Allure magazine, Jennifer Aniston reveals her opinion on the state of Hollywood stardom. And I will quote, "I'm a little choked up. I feel like it's dying. There are no more movie stars. There's no more glamour. Even the Oscar parties used to be so fun." Now, since its inception, Hollywood has entertained not only through its content, but through its stars. In fact, in the golden age of Hollywood, like between the 20s and 50s, you had Audrey Hepburn, Bette Davis, Elizabeth Taylor, John Wayne, Humphrey Bogart. They reigned supreme. MGM, Paramount, Fox, Warner Brothers, those studios, they recognized the power of the movie star. And this level of stardom emerged again in the late 90s and into the early 2000s, like Jennifer Aniston and Angelina Jolie, Brad Pitt, George Clooney, Julia Roberts, Tom Cruise. They cemented themselves as major players in Hollywood during this time. In fact, studios still kind of recognize the driving force behind a film's success is often its actors. I mean, Tom Cruise, a guy who's almost 60, he might be 60. He redid the Top Gun movie and Maverick, Top Gun Maverick. That was one of the most successful films of this year, of 2022. Okay. Tom Cruise and Jennifer Aniston's popularity have both gone beyond screen, and their personal lives and their presence has made them not only successful actors, but celebrities. In other words, movie stars. Now, what you may be saying to yourself is, oh, come on, Strong, you're just being an old man. There's still movie stars out there. It's the same. Who are some of the movie stars today? Brie Larson, Chris Hemsworth, Tom Holland. They star in comic book movies, okay? So anybody could do this. It's just, and again, the comic book movies are fine, but they're all the same. You dress up like some in some dopey costume, and it's all CGI effects. These people will never be as recognizable as Jennifer Aniston or Brad Pitt or Tom Cruise, because they're only going to pay them so much. And if they don't want it, they'll just get somebody else dressed up in a costume. How many Batmans have there been? Who was the best Batman? Who was the best Captain America? Who was the best Spider-Man? Who knows? They were dressed in a costume. You couldn't even see their mask. Okay? And by the way, most of the action is done with CGI. And just like the Wall Street Journal article, it can be done with artificial intelligence. In other words, either way, there's no denying the drastic shift that Hollywood is seeing in today's day and age and the disappearance of the true movie star. Don't take my word for it. Ask a real movie star. Ask Jennifer Aniston. Okay. The essay for today, Cryptocurrency Explained or Not. This week, a company called FTX, okay, and they're not a cryptocurrency per se. They're what's called a cryptocurrency exchange. And you say, well, what is that? Well, it's a marketplace to buy and sell cryptocurrency. Okay. But they're not a cryptocurrency themselves. It's just where you go to buy it. Okay, well, I can buy Bitcoin at the Huck's grocery store, Huck's gas station. There's a sign outside that says that. Okay, but it's kind of like the stock market for cryptocurrency. Okay. Now, FTX investors fear that the money it just dried up. In fact, about 2 weeks ago, they were doing fine. Now they're filing for bankruptcy. Now, who's invested with these people? Well, how about since 1990, the Ontario Teachers Pension Plan? That's not Ontario, California, but Ontario, Canada. They've managed hundreds of billions of dollars in assets. Well, they have to, because they have over 200,000 education workers that get pensions. But on Thursday of this week, the Canadian Pension Fund warned in a statement that it had suffered a hit from a more alternative gamble. That's right. They invested $75 million in FTX International, the troubled global cryptocurrency exchange, in a financing round last year. Now they're going bankrupt. Okay. Now on Friday, FTX announced it would file for bankruptcy and that its president, Sam Bankman-Fried, is resigning as the CEO. This move affects some 130 related companies, including large global cryptocurrency exchange FTX.com. Now, everyday investors, along with the celebrity endorsers, venture capital firms, and others, are facing deep uncertainty in the aftermath. Now, this could be a very significant event for a lot of investors, especially retail investors. That's according to Chester Splatt. He's a former chief economist for the Securities and Exchange Commission and is professor of finance at Carnegie Mellon University, noting the struggle many customers will face trying to get their money out of bankruptcy. Bankman-Fried, again, the CEO that resigned, offered little information on when or if those customers would find relief, saying only that, quote, I'm going to work on giving clarity on where things are in terms of user recovery as soon as possible. He also said that he was really sorry, again, that we ended up here and that hopefully things can find a way to recover. Hopefully this can bring back some amount of transparency, trust in governments. Ultimately, hopefully, it can be better for customers. And how did he do this? Via Twitter. It wasn't a press conference. It wasn't with an interview with the Wall Street Journal or the New York Times. It was via a tweet. And he kept saying, hopefully, good luck. Hopefully, we're going to make this more transparent. Just think about that for a minute. In other words, you know what? 2 weeks ago, we were fine. Now we're bankrupt. You can't get your money out, and hopefully we'll be transparent. Translation, hopefully we'll be able to tell you what happened. In other words, hopefully we'll be able to tell you what happened and why you lost your life savings, but maybe not. You had to know. Why don't you tell them? Now, the bankruptcy filing concludes a sharp turn of events for one of the crypto world's most influenced personalities. That's Bankman-Fried. In fact, on Tuesday of last week, Bankman-Fried shocked the tech and finance realms when he said that he was selling his company to Binance. They're another exchange and FTX's biggest rival. Now, 2 days earlier, Binance CEO Changpeng Zhao had precipitated that it was essentially a bank run on FTX when he tweeted critically about the company's cryptocurrency token. Now, on Wednesday, the next day, the deal fell apart as Binance said that FTX financial issues are beyond our control or ability to help amid questions of whether Bankman-Fried had been transferring FTX customer funds to Alameda Research, his own personal trading firm. Now, Bankman-Fried has since been seeking other capital to keep FTX afloat. Now, remember, these guys are just a broker, okay? They're just a broker. I'm thinking, how can you lose so much money as a broker? We're talking billions of dollars here. Now, a spokesman for FTX, his name is Peter Padovano, said the company had no comment on the events of the past few days. A message to Bankman-Fried was not returned. A Binance spokeswoman did not elaborate beyond Wednesday's statement from Zhao. So Tuesday, yeah, we're going to buy these people. On Wednesday, we're not buying this thing. These people are toast. In 1 day's time, they go from, yeah, we'd love to buy these people to, no way we're going to do this because they're far past being fixed. So the question is asked, is cryptocurrency itself just a house of cards? In fact, this week, users frantically and unsuccessfully sought to get their money out of the exchange FTX. And FTX said, sorry, we're pausing withdrawals. Kind of like a run on the bank, okay? Like on, what was the big movie with It's a Wonderful Life, okay? Before the FDIC. But basically, these people are an exchange house, and people said, okay, you've got troubles. I'll take my cryptocurrency back. And they said, sorry, we're closed. Now, a crypto exchange, let me explain what that is. It's actually a platform where consumers can easily buy and sell cryptocurrencies. Not a crypto lender. In fact, unlike a crypto lender, which invests a consumer's deposits in a manner of banks, it's an exchange that's supposed to function merely as a conduit, allowing customers to make transactions and exchanges, and then it takes a commission from that transaction. Now, a Washington Post analysis of blockchain data provided by Dune Analytics, they're an independent research firm, showed that withdrawals from FTX.com declined precipitously starting on Tuesday. Wednesday and Thursday's totals were about 5% of the withdrawals on a typical day before the crisis. In other words, they just stopped letting people take their money out. A username, in other words, what happened is I've got 75 Bitcoin that I want to put out there on your exchange so you can sell it to somebody. Uh-oh, you're in trouble. I'll take my Bitcoin back. Sorry, you can't have it back. That's basically what's happened. In fact, there was a user, his name was William Martinez. He said that a $31,000 deposit was stuck on FTX after he transferred it from a digital wallet. So he tweeted them back, please help me get it back. And again, tweeted. Another FTX customer took to Twitter, worried about his funds being in limbo too. My life savings are stuck on FTX. Man, help us, for the love of God. He tweeted to Zhao, the guy from Binance. Now, in a message to the Washington Post, the FTX customer, who only gave his first name as Mustafa because he was worried about scammers, said he had been trying to withdraw his money since Tuesday, but the request remains pending. He has no idea if he will ever see his hard-earned money again. He lives in Morocco. Now, here's the thing. If I have my money in, let's say, Bank of America, and I go to Bank of America and they don't give me my money back, I'm going to go to the FDIC. I'm going to go to the Banking Commission. I'm not going to throw something out there on Twitter. To me, that's bizarre. That's just like posting on Facebook saying, somebody's ripped me off, help. Nobody's going to help you. What's the matter with you? Now, Bankman-Fried, he spent the last few days trying to raise money to avoid filing for bankruptcy. That was earlier last week, but he failed. The Wall Street Journal reported that Bankman-Fried had told investors he would need as much as $8 billion to become liquid. $8 billion to become liquid. Now remember, all you did was take somebody's cryptocurrency, find a buyer, sell it to him, and take a commission. Why would you need $8 billion to become liquid? How could you have possibly become not liquid? Because you're just a conduit. You're just a broker. Now, they've been founded, way back in the day in 2019, so they're only 3 years old. But FTX grew quickly amid the pandemic-driven boom for cryptocurrency in 2020 and 2021. And they reached a $32 billion valuation earlier this year. The company also attracted $1.8 billion in financing, and it at one point had as many as 1 million customers. Now, one of those financiers, venture capital firm Sequoia Capital, has already marked down its $210 million investment to $0. In other words, they invested $210 million in this company, and they just written it all off. Again, a brokerage firm, something that owns nothing. They just transfer. They're a broker. The news could even affect the pocketbooks of Tom Brady and Gisele Bündchen, who were featured in ads for the platform and were given stakes in the company, an FTX release said at the time. Well, it affects the model and the football player, so now we really need to pay attention. Other firms that invested in FTX, including Paradigm, BlackRock, Tiger Global, and Insight Partners, could also see their investment shriveled up. So could, of course, the Ontario Pension Fund, one of Canada's largest. So, Ontario teachers, you could be screwed too. Congratulations. Now, TVG Investments has structured to provide Ontario teachers with returns commensurate with the risk undertaking. That's what the fund said in a statement, noting that some $75 million went to FTX.US, along with an additional $20 million. Now, recent crypto history is not encouraging for consumers. Back in June, the embattled digital bank called Cellulus Network froze customer withdrawals, leaving scores of depositors without access to their accounts. The company filed for bankruptcy a month later, and many users still can't even access their funds. And this goes on and on and on and on, okay? And when they ask for money, and here's the thing that just baffled me, okay? The amount of money that they needed to become liquid. Okay, that's not even the biggest story. Okay, let's go back to the part of the story. They needed, how much was it? Come on, Strong, find it. How much did the guy need? Where is it? What was it? 8 billion, 6 billion, something like that. But it wasn't 8 billion in Bitcoin. It wasn't 8 billion in Dogecoin. It was $8 billion. I've said it before. I don't understand how cryptocurrency works. That's why I don't invest in cryptocurrency. In my opinion, cryptocurrency is just made up BS. That's all it is, okay? And I base that on, once upon a time, I had an old KLPW listener approach me wanting me to buy their new cryptocurrency. And she talked about, it's this, it's that, it's wonderful. You can buy it this, you can make 10, 20, 100 times your money back. And I said, okay, explain it to me. And she kind of did, but I still didn't get it. I'm thinking, okay, maybe I'm being dense. Can you do it again? Well, I still didn't know anymore. She says, okay, well, I need to get my manager to explain it to you, which to me sounds like a pyramid scheme. But okay, I'll talk to your manager. So I talked to the manager via email. And he was just as opaque as he could be. And finally I said, look, let's have a long-term conversation about this. Come on my podcast and we'll talk about cryptocurrency. He wouldn't do it. I said, look, not only will you try to convince me, but you can convince my plethora of listeners and perhaps get more business. He wouldn't do it. But they kept coming back saying, yeah, but we need you to invest. We need you to invest. I said, look, you come on my podcast, you convince me this is a good thing, and I will invest. He said, well, I'll come on your podcast anytime. I said, you've already told me you won't. I said, and I reached out to him. I said, okay, I tell you what, you give me a day and a time, because he kept saying, I'm busy. Okay, everybody's busy. Here's what I know about sales, and I've been in the sales business for a long, long time. If you really want to sell somebody something, you make yourself available. Because if you don't make yourself available to explain what you're selling, you're never going to sell anything. And this guy would not make himself available. That raised a big flag. Finally, he came back and says, you name the time, or I told him, I said, look, you're busy. You name the time and place, and I'll have you on the podcast. And he came back with, how about 3:30 in the morning next Tuesday? I was done. Because this guy, he didn't want to explain anything to me. Because he couldn't, in my opinion. Cryptocurrency, friends, in my opinion, is the ultimate fiat currency. Now, many of you out there say, well, strong, the U.S. dollar is a fiat currency because it's not based in gold. Stop it. It's not a fiat currency. It's based in the trust of the U.S. government. Is it based in gold? No. But let's say it was. What does that mean? What is gold? Gold is something they stick out of the ground. It's shiny. Okay? That doesn't mean anything. I'll give you an example. I've used this example time and time again. What if a virus hit the world and it only affected women, and something in their brain made them decide that they don't like diamonds anymore? What do you think would happen to the world diamond market? It would crash overnight, because the only reason diamonds are worth anything, and okay, sure. There are industrial applications for diamonds. That's true. But for the most part, diamonds exist because ladies want them in their jewelry. If a virus affected women's brains where they no longer thought diamonds were attractive, the price of a diamond, take away many zeros from the price of a diamond. Let's just say that. So everything is a cryptocurrency per se. But these fiat currencies like Bitcoin and Dogecoin and all the other made-up currencies, it's just made up. It's a Ponzi scheme. It's a shell game. It's a pyramid scheme. It's a game of musical chairs. And basically, this FTX company, they provided the chairs and the music. That's all they did. And they needed a bailout of billions of dollars. Now, why did they need a bailout of billions of dollars? Why did they need a bailout in billions of Bitcoin or billions of Dogecoin? Because the real money is dollars. What's Bitcoin worth? Well, it's worth $64,000. You don't say, okay, I've got $64,000. How can I get Bitcoin now? Nobody says that. It's how much is it worth in dollars or euro or RMB or fill in the blank of the currency. Cryptocurrency, crypto as a whole is a Ponzi scheme. It's a game of musical chairs. And the crypto exchanges just provide the chairs. That's it. Stocks have tangible assets. For example, when General Motors was talking about going bankrupt and the government bailed them out, had the government not bailed them out, General Motors had assets. They had buildings, they had factories, they had machinery, they had inventory, they had all this kind of stuff. So if they filed for bankruptcy, Their assets would have gone into a pool, and its investors would have been given maybe 10 cents on the dollar, maybe 20 cents, maybe 30 cents. They would have gotten something because there were tangible assets. FTX has no tangible assets. Zero. People gave them their money to sell. And they said, give it back. They said, sorry, it's gone. Where did it go? Did they just put it in their own bank? Or did they sell it and pocket it? That's the only two things that could have happened, unless I'm missing something, okay? Unless I'm missing something. That's all that could have happened. They either stole it. Well, no, I think that's the only thing that could happen. They stole it, or they invested it wrong. Maybe they took it and they invested it in something else. It went broke, which is against the law, okay? FTX allowed people to buy and sell a made-up product. Where did their billions of dollars go? And that's something I never understand about cryptocurrency. Normally, I don't like to talk about things that I don't understand. But I felt it important to talk about cryptocurrencies that I don't understand. And I will give an open invitation to anybody. Dear listener, if you know what cryptocurrencies are all about, if you think that I don't know what I'm talking about, if you think I'm wrong, here's an open invitation. I will have you on the show and, within reason, give you as much time as you need to explain it to me. I'll give you up to 2 hours. How's that? Make me a believer. I bet I don't get one person taking up this challenge. And I don't think it's because nobody wants to come on my dopey show, because lots of people do. I don't think it's because I have only a few listeners, because I have a lot more than a few. I think it's because nobody involved in cryptocurrency wants to have the tough question asked of them, because they don't have an answer. Well, that's it. I'm done. Thanks for listening to the broadcast. Thanks for listening to the podcast. Thank you for supporting the podcast. The numbers look pretty good. I'm impressed with that. You're sharing the podcast with others. I appreciate that. I thank you for that. Continue to spread the word, please. And, tell your friends, look, send this guy an email. That way you don't have to share it with him. He'll send it to your mailbox itself. JamesStrongShow@hotmail.com. That's the email address. You or your friends can go ahead and send me an email. I will send you a link to the podcast when it's published. You can download it and listen to it at your leisure. That's it. We're done. Until next time, this is James Strong saying adios.